Hey everybody, Peter Schmitz here. After I helped my family save over $75,000 in student loan interest payments and repay my $30,000 of student loan debt in 18 months, I designed this course to help you understand, refinance, and repay your student loans. With the student loan debt crisis at over $1.5 trillion, the average college graduate comes out of school with over $35,000 of student loan debt. And on top of that, they carry that debt well into their 30s and sometimes even into their 40s. In this course, we're going to educate you on your student loans. You're going to understand your statements, the different types of interest rates, the different kinds of loans that you might have, and then we're going to help you identify what loans to refinance. We're also going to make suggestions on trusted companies to work with so that you get the best interest rate for your student loans. The main assignment of this course is going to be building out your own student loan spreadsheet and identifying how much money you are going to save through the refinancing process. So the best time to take control over your finances and your student loans is now. We look forward to working with you. We've already helped people save thousands, hundreds of thousands of dollars, millions of dollars through student loans, through refinancing. We look forward to working with you. We look forward to impacting your life, and we look forward to watching how many millions of dollars we can save through this course as we educate people on student loans and teach them how to refinance. Congratulations and welcome to the course. We look forward to working with you on your student loan debt-free journey to help you get out of debt. As you can see, this course is split up into two sections. The first section is going to be the understanding portion of the course, identifying what your student loans are, understanding what your interest rates are, what that means, are your loans federal, are they private, all of the ins and outs. The second half of this course is going to be putting together your student loan spreadsheet so we can identify which loans to refinance to help you save thousands. I look forward to working with you and look forward to helping you save thousands on this journey. We're going to walk through some of the items that you will need in order to successfully complete this course. We recommend having headphones and a notebook to keep notes as you move along in this course, as if you are unfamiliar with your current student loans, a lot of these concepts are going to be new to you. From there, within the course, you're going to have some different downloads and resources that you will have access to. We recommend downloading and saving a copy of the student loan spreadsheet that we will build out through the duration of the course, as well as the student loan spreadsheet example file that has mock-up loans that will be used as a reference if you have personal questions on the student loan spreadsheet. In addition, we have the student loan guide, which has additional resources and companies that we recommend refinancing through. We will refer back to this guide throughout the course, so we recommend just downloading and saving a copy to your computer. The next items you will need is your most recent monthly loan statements. In one of the first videos, we will walk through how to make sure you have all of your monthly loan statements for both your federal and private loans. These will be used to put together both your student loan spreadsheet and come in handy once you get to the refinancing portion of the course. We also recommend putting together and compiling your personal documentation that will be used during the refinancing portion of this course. You'll need to verify your income when you go to refinance your loans, and they will probably ask for your 2 recent paychecks. In addition, you will need to verify your identity, and this can be done through a license, a passport, a green card, or whatever you use as your main form of identification. We will walk through what a cosigner is and how to apply one to the loan, but understand that if you have a cosigner, they will need these 2 items as well, their paychecks and identity verification when you refinance your loans. Section 1 of this course is dedicated to understanding student loans. We're going to dive into the details so that when we get to Section 2 of this course, as we put together your student loan spreadsheet and identify what loans to refinance, you have a thorough understanding of the ins and outs of student loans. The first thing we're going to want to do is compile your current student loans. We want to ensure that you have all of your loans in front of you, and we're going to walk through how to look up your federal student loans and make sure that you have all of your private student loans. We will use the National Student Loan Data System to ensure that you have all of your federal student loans in front of you. In the Student Loan Guide, you will find step-by-step instructions as to how to go about using this website. It is fairly straightforward and simple to use, and what it will do is produce you all of your current federal student loans, as you can see here on the right. So within the Student Loan Guide, follow the step-by-step instructions and walk through to make sure that you have all of your federal student loans in front of you. Since your private student loans will not show up on this National Student Loan Data System, one of the best ways to go about identifying all of your private loans is running a free detailed credit report. You can use a company like Credit Karma or TransUnion or Equifax, and if you do a detailed report, you will see all of your outstanding loans, both private student loans and federal student loans, on that report to do a cross-check to make sure that you have all your private loans. As you can see, we have some of the common private student loan companies. This is not a comprehensive list, but some of the most common companies we see recent graduates have their student loans through. Now that you have all of your federal and private student loans identified, the next thing we're going to want to do is obtain your most recent monthly statement for each of your loans. We're going to recommend going ahead and setting up online access to each of your lender's websites so that you can download and save your most recent loan statement from each of your student loans. If you do have trouble locating past loan information or logging into your lender's website, just go ahead and give them a call, and a representative will be able to help you walk through the setup process. These statements are going to allow us to begin to fill out your student loan spreadsheet, which we will use to identify which loans to refinance and which loans not to refinance. Now that you have all of your student loans identified and in front of you, we want to walk through the student loan statement to help you make sense of it. We're going to walk through an overview of what is all included on a student loan statement, and you can follow along with one of yours. If you are following along with your own student loan statement, understand that it might look a little bit different than this. That's okay. Each lender is going to have their unique style, but it's going to have all of the same information as this student loan statement does. We're going to walk through this in 3 separate sections. At the top, you will see the general loan information. The second section will be the loan specifics, and the third section will be lender clauses and lender specifics. In the first section, you will just see general information on the payment due date. This is just the lender reminding you on when your payment is being made, along with the date of your payment. So with this being an example document from a past student of mine, you can see that on the 15th of each month, this student makes their monthly payment on this loan. Where we will focus most of our attention is in the second section, where we have the loan specifics. You will see the loan ID, the interest rate, the principal balance, your interest balance, your total loan balance, your payment method, your account number, your past due payments, your current payment, your late fees, your NSF fees, and other fees. You also see total due at the very end. This section is going to give you an understanding of where all of your loans are at and help us eventually put together your student loan spreadsheet. In the third section, you'll just see additional information regarding payment specifics. If you're following along on this loan, you can take the time to read it, and if you are at home following along with your own student loan statement, you can read the additional information that the lender has included. Now that you have an understanding of what is included in your student loan statement, we are going to dive into section 2 in the subsequent videos. We are going to go through each of the columns so that you understand the ins and outs of your student loans. Understanding the difference between federal and private loans is one of the most vital components to understanding your student loan picture as a whole. In this section, we are going to walk through all the differences between your federal student loans and your private student loans. There are several distinct features when it comes to federal student loans. First off, interest rates on federal student loans are fixed.
Federal student loans typically have subsidies in case you are in a position where you need financial need or you plan on going back to further schooling, and have more options for repayment plans. In addition, if you work in certain public service sectors, you may be eligible to have some portion of your federal student loans forgiven. These are the 5 different types of federal student loans. For the purpose of this course, we will not dive into the details of the differences. However, if you do have an interest in exploring what the differences are between these 5 student loans, you can refer to the student loan guide that will walk you through all of the differences between these loans. Due to the increased flexibility of repayment plans associated with federal student loans and fixed interest rates, along with lower interest rates on federal loans, we are not going to advise throughout this course that you refinance any of your federal loans. For refinancing purposes, we will look exclusively at your private student loans. Private loans are typically offered through banks, credit unions, and other online lenders. These are some of the most common lenders when it comes to private student loans. It's important to note that a private student loan can be either fixed or variable interest rate and is not subsidized, so there's less flexibility when it comes to repayment options. To help simplify the understanding of private student loans, you can think of it as just any other loan that you would take out from the bank. It is important to note on your student loan spreadsheet which of your loans are private and which of your loans are federal, because for refinancing purposes, we will only be looking at your private student loans.
If you're looking for further information regarding federal and private student loans, just refer back to the student loan guide and the included resources. We are going to dive into interest rates and the differences between fixed interest rates and variable interest rates. Interest rates are going to be a very key component to understanding your student loans and also identifying which loans we are going to refinance and which loans we are not going to refinance. As you can see, there are several differences between fixed interest rates and variable interest rates. One of the first differences is that all of your federal loans are only going to have fixed interest rates. However, for a private loan, some are going to have fixed rates and some are going to be variable rates. Since all of your federal loans are going to have fixed interest rates, we are not going to refinance any of your federal loans. So for the purpose of this course, we are just going to look at refinancing your private student loans. However, we are going to include all of your federal and private student loans in the student loan spreadsheet as we create that. The biggest difference between fixed and variable interest rates is the way the interest rate evolves over time. As you can see, with a fixed interest rate, it will remain the same over the life of the loan. So if it's a 15-year term loan, on day 1 you take that loan out, the interest rate will be the exact same the day you pay it off 15 years later. However, in a variable interest rate, the interest rate will change over the life of the loan depending on the economy. Now, you can look into all the details to what causes an interest rate to change, but for the purpose of this course, we are just going to identify that a variable interest rate is going to change over the life of the loan. And typically that change happens monthly or quarterly. So typically that rate is going to increase with the life of the loan. Now, there is a chance that it can decrease, but all of the loans that I have seen and helped refinance over the years have increased by the end term that the loan has gone through. So for that case, we want to make sure that we are looking for your private loans that are variable and refinancing those loans, because what we want to do is lock in those loans and make sure that they don't change over the life of the loan and that your interest rate remains constant. The last 2 big differences between fixed and variable interest rates is that there is a lot less risk associated with fixed interest rates. This is due to having predictable monthly payments. The amount due on a fixed interest rate loan is not going to change on a month-to-month basis.
as well as the total number of monthly payments will not change over the life of the loan. However, since a variable interest rate can change month to month, you're taking on more risk because it can be a change from a month to a month basis on how much you owe on that loan, and how many total number of monthly payments you're going to make on that loan could change over time. So what we want to do is mitigate risk by helping you refinance your variable interest rates into fixed interest rates so that you know going into the loan how much you're going to pay over the life of that loan in order to pay it back. Our refinancing recommendation is going to be refinancing any of your high fixed interest rates and any of your variable interest rates into new fixed rate loans. What this is going to allow you to do is reduce the risk that you take on with the loan, lock in your rate so that you know what it's going to be and what your monthly payments will be over the life of your loan, and help you avoid any budgetary surprises. So we're going to lock in that rate for you and help you refinance any of those loans into fixed rates. If you're looking for further information on fixed and variable interest rates, refer to the Student Loan Guide, and that has hyperlinks to good websites that's going to help you identify any outstanding questions that you might have if you're looking to do some further research on the difference between fixed and variable interest rates. One potential benefit you can have with refinancing student loans is the role of a cosigner. In this section, we're going to walk through what a cosigner means to the loan and what the risks and benefits are associated with it. Including a cosigner on your student loans can have a couple of benefits. First off, since many recent grads do not have a lengthy credit history, including a cosigner can give you a better chance of qualifying for a loan. Second off, having a cosigner can also help you qualify for lower interest rates. When it comes to cosigning a loan, the most common cosigners are parents and spouses. It is important to note that the cosigner does not necessarily have to be related to you. However, we do not recommend having a boyfriend or a girlfriend cosign on your student loans. The cosigner will be responsible for providing any documentation that is needed as we go through the refinancing process. While there are many benefits associated with having a cosigner in your loan, it is important to also understand the potential risks associated with it. The cosigner is considered a co-borrower, which means they become responsible for the loan if the primary borrower stops making payments on the loan. If the primary borrower misses payments or starts to develop a trend with late payments, the lender will start seeking monthly payments from the cosigner. In addition, the student loans will appear on the cosigner's credit history, which could impact future loans that the cosigner would like to take out. When asking someone to cosign on your loan, we recommend that the cosigner read through all of the appropriate documentation that the lender provides. This will help them understand the potential risks that they will face if you fail to make payments on your loan. In addition, we recommend having a thorough conversation with your cosigner so that you can develop some trust and that you two are on the same page when it comes to repaying your student loans. While there are risks associated with being a cosigner, we do recommend having one when possible. Personally, my parents were willing to cosign on my loan, and it helped me qualify for a much lower interest rate. If you're looking for additional information regarding cosigners, refer to the Student Loan Guide and the attached resources. As we move into the interactive component of the course and put together your student loan spreadsheet to help you understand what your outstanding balances are, how much interest you're going to pay to give you a full picture of your loans, it is important to understand what loans we are going to refinance. In this section, we are going to identify the criteria that we will look for when it comes to refinancing your loans. As we talked about in previous sections, we will only look at refinancing your private student loans. With that being said, we are going to leave all of your federal student loans as is. Within your private student loans, we are going to look for refinancing options for all of your variable interest rate student loans, as well as your private student loans with fixed interest rates above 5%. Many lenders have a minimum outstanding balance requirement of $5,000 when it comes to refinancing your student loans. As a result, we will look for all of your private student loans with balances over $5,000, as well as consolidating loans so that the refinanced loan is over $5,000. It is important to note that you can consolidate your loans in the refinancing process. If you have loans that are lower than $5,000, you can consolidate them together with loans that are also below $5,000 or loans that are over $5,000 so that it goes above the minimum threshold that many lenders require. As an example, if you have one private student loan at $3,200 and a second loan at $5,700, you can refinance those loans into one and have one loan of $8,900 going forward. As we talked about earlier, we are going to recommend refinancing all of your loans into fixed interest rates. In addition, as you begin to shop for rates, it's important to understand that you can get offers from lenders and then choose to accept it or not. That's why we recommend shopping around all of your private student loans that have variable interest rates, fixed interest rates above 5%, because just when you get the offer, you do not have to commit to the loan. You can put it through the student loan spreadsheet and see if it makes sense to refinance that loan or not. As you begin to shop around for rates on your student loan refinancing, refer to the student loan guide as we have a list of companies that we recommend starting with and we recommend using for refinancing student loans. The list is of trusted companies, of companies that we recommended students in the past that we believe will get you the lowest interest rates as you look to refinance your loans. Now that we have identified what loans you are going to refinance and you have put together your student loan spreadsheet, we can move into the refinancing portion of the course. In this section, we are going to walk through each of the different lenders and how to navigate their application process. In the student loan guide, we have the recommended companies that we suggest when it comes to refinancing. In addition, we have hyperlinks there to take you right to their student loan refinancing portion of their website. Now, I do want to note that these are our referral codes, so if you do use them, we thank you in advance, but we do understand if you do not want to use them. We're going to walk through how to refinance your student loans through LendKey. As you can see here, we are in the refinancing student loans section, and if you look at the bottom, you'll see some of their different loan years, their different rates, and some reviews you can read up on. It's important to note as we go through these steps, checking your rate will not affect your credit score. So let's go ahead and get started and go to the section where we can now start to create your profile for you on LendKey. In this first section, we're just going to provide some of your basic details so that LendKey can start to create your profile for you, and so you can get some basic rates on what your interest rates might be. So as you fill out your basic information, you can see they'll need some stuff like first name, last name, where you live, your email, and so you can just go ahead and fill this all out. As you scroll down, you'll see some of the other information that they'll need, like a phone number, your current citizenship status, and your total annual income. So for this example, I'll use my name, a sample address, a sample phone number, and let's say for the purpose of this that you make $55,000. Now later on, you're going to have to verify your income, so don't just put in a random number. LendKey's going to ask, why are you refinancing your loans? And then the total loan amount that you are going to refinance for. So let's say you're going to refinance a loan for $25,000. You got your bachelor's degree, and you went to the greatest school on the planet, University of Wisconsin-Madison.
Now from here you can read the consent, but as we just get your loan offers, this will not affect your credit score. This will just be a soft credit inquiry. And so we'll just go ahead and check your rate, and we will get the offers here in a second. Now you can see the different loans and the different interest rates that you have qualified for. So you'll see both fixed and variable 5, 10, 15, and 20-year loan terms. So you can take a look at what you have, and now what we can do is actually add a cosigner. So let's put in a sample cosigner here and see if it changes your loan at all. So after you had your conversation with who's going to cosign, you can just fill out that basic information. So first name, last name, you're going to need their address, the city, you're going to need the state, zip code, the citizenship, and what their total annual income is as they refinance. It's important to note that your cosigner as well will have to verify their income, which we'll talk about later. Now you can see the consent and agreement, and let's check your rate with a cosigner. It's also important to note that you can change your cosigner later. It doesn't have to be the cosigner that you enter. You can try one parent and then you can try another parent as an example. Now here are all your rates with a cosigner. And you can see in this example that the rates went down. And up at the top here you can see with a cosigner, without a cosigner, and then compare the offers. So for the purpose of this example, let's say we're going to select the 10-year loan term with a cosigner. Now we're just going to go ahead and officially create your account. So you can see the different password criteria that you'll need to hit. Just go ahead and create your account. You'll get an email to verify everything as well. So now we're just going to finalize and submit your application. You'll see the personal information that it'll ask for, your social, date of birth, cosigner information. You'll now see that you're going to consent to a full credit inquiry. And you can see all of your application details on the right. Who you are, who your cosigner is, how much you're going to lend for. Depending on what state you live in, they might ask for some further information. And then you would type your name into the signature area. These are your documents that are going to walk through the different loans that you are applying for. So I recommend reading through these and familiarizing yourself with this documentation. At that point, you can just consent and then submit your application. And once you submit your application, LendKey is going to work with different lenders and credit unions to help you get the best rate. And from there, you will walk through the lender-specific portal to help you set up the rest of your loan. This is where you will want to have your documentation ready, your most recent income verification statement, so the last 1 or 2 paychecks, your most recent loan statement, and a driver's license or passport to verify your identity. From there, you will be able to create your loan, get it funded, get it approved, and start paying LendKey as opposed to your current lender. In this video, we're going to walk through the SoFi application process. As you can see, this is through the SoFi referral program from the Student Loan Guide. So if you use our link, thank you, and if not, we understand. As you scroll down, you'll just see some basic facts about SoFi, some reviews on the company. And once you're ready, you can go ahead and click Find My Rate. So just getting started with a few basics here. So this will just be some preliminary information that you'll need for your account. So first name, last name, state of residence, an email address, and then once you get that all put in, you'll just put together a password.
Even if it says this password is weak and may be rejected, you can try it and see if it goes through. So we'll click I agree, continue, and the password worked. Now we're going to start to put together your profile and answer the basic questions that SoFi has. So we'll start out here, putting together your date of birth, your citizen status, now your contact information, so your street address, we'll just go ahead and fill that out for this. In the lower right-hand corner, you'll also notice that they have a live chat if you have any questions throughout the application process. Your current living arrangement, say you're renting, you had an undergraduate degree, where you went to school, your undergraduate program, and the month and year that you graduated in. Your current employment status, the name of your current employer, what your annual income is, so we'll use the $55,000 as an example again, and how many years you have worked professionally. So here we will use the refinancing amount that we talked about, and you can see that you need to have a greater than $5,000 balance. And now at this point, what you want to realize is when you check your rate, it'll just be a soft credit inquiry, so it will not show up on your credit report. And it has all of the different information on their fixed interest rates, all their loan fees, their different examples. So I recommend walking through this and understanding it, because this will really help you understand how SoFi goes about refinancing loans and what your repayment plans are for SoFi. So we'll click check my rate. And you can see here that congratulations, you're pre-qualified. So I've been approved to have a loan or refinance loan through SoFi. And these are some of the different rates and terms that I was approved for. This up here is a calculator to calculate what your current rate is with your current loan, and now with a refinance loan, how much you will be saving. So let's choose a 7-year. And you can see that they have a date when they expire. So you have a little over a month to put together your full profile, so you can actually log off and come back to it. And now we're going to go ahead and add a cosigner to see what the rates are with a cosigner. One thing to note is you have to be pre-approved through SoFi before you can add a cosigner. On some other ones, you can apply for the initial to see if you're pre-qualified with a cosigner, but in SoFi, you have to be pre-qualified, and then you can add a cosigner to see what happens with your current rates. So you can see, in addition, right now, SoFi is giving you a welcome bonus of $100. So using that referral link, you'll get $100 as well, and then an auto pay discount. So let's do the cosigner, 7 years, 5.8% interest rate. Continue on here. So now at this point, what you're going to do is upload those documents that we talked about. So you're going to see you need your most recent pay stub to verify your income.
In addition, you're going to work with SoFi to provide them your most recent billing statements from the loans that you are refinancing. From there, enter in your social security number, click consent, and then apply now. You will work directly with SoFi to finalize your application process as well as your cosigner to get all of the necessary documentation added. After your loan is paid off by SoFi, you will begin to pay them, and I recommend signing up for AutoPay to get the discount.